You're listening to UCW Radio. In your face.
What we got here is a failure to communicate.
Oh, have I got your attention now?
For lack of a better word, is good.
You know what I mean?
Money to be made in a place like this. Money never sleeps, pal.
You're crazy.
You know what it takes to sell real estate?
It takes brass.
I've fallen, and I can't get up.
All right, welcome to Money Never Sleeps, the show where we talk about anything and everything that impacts the flow of money from around the corner to around the world. And, we live in a new world now. This is the new normal. A lot of things are happening, a lot of changes, a lot of adjustments. People are going to have to adapt to what's going to be forthcoming. Interesting times for sure. I want to go over a few things with you guys. To show you that the impact is not just what's happening or happened already, it's what is to come. Okay, Tyson Foods, they made an announcement and pretty much preparing the public for higher prices in chicken and turkey and other meats and so on and so forth. This is the first stone. Supply chain disruptions is going to be the cause of that. When they have a problem, like right now, they had a well-oiled machine. They would move things from point A to point B, and there you go. You get it right there at your supermarket. You pick it up, and you got that, and it's there in your refrigerator. Now things are going to be different. Okay, where they may not be able to get it to where it needs to get to. It may be more costly for them, which is more costly for the general consumer. Whether they're getting it from their farms, other farms, as far as the product. And maybe it's a good case to go vegan or vegetarian or whatever your choice is. But yeah, this is just one sector. You have other sectors that I'm sure that this is going to come up too. This is going to be something to point to, an excuse to raise prices. And honestly, that's probably not a good thing. You're going to raise prices on food, and it's going to be costly for the average American to go and fill their fridge if that should happen. And I just hope that it's not something that flows to other companies, other suppliers, other food suppliers. But just have a feeling it just may, because it's a perfect excuse, and who's going to question it? Whether it's true or not, who's going to question it? But anyway, so we'll see what happens there. This particular company, they're prepping the general public for increased prices. I think that they should do everything in their power not to let that happen. Be a leader and show, how you can get things done. But, if you're talking about disruptions in the supply chain, you can have issues. Anyway, moving forward, oil. We've been speaking about this for the past, few weeks. Had history and more history and more history. You had, back with the May contracts, you had, people rolling out of them, rolling into June. And then you had, just recently, you had, institutions rolling out of June and going into contracts that are further out, which is just making that contract collapse. So, and it's, again, this is a domino effect. It's something that'll create issues elsewhere. You have companies that were teetering on the brink of extinction, and as oil prices came down, so did their lifeline. And you have a couple of companies that already filed for a Chapter 11, or they're looking for protection, bankruptcy protection, and it's something that may continue with other companies. See, here goes the situation with oil. Oil comes down, you have more of a supply. People think, okay, great, it's going to correlate to lower gas prices. That's not always the case. As we see now, if it correlated to that, gas should be at 50 cents a gallon, and it's not. What's happening now, especially, with, here goes a domino effect, or how everything just kind of blends in with the contracts. I'm sure that a lot of institutions or organizations, they were put the oil, so now they have to go find storage. There's no storage, okay, and there's no storage, or limited storage, because people aren't traveling, they're not driving, they're not doing this, they're not doing that, so they're not using gas. They're not, oil is not the in the most demand as it normally is. So you have no storage, you have more oil coming out and being stockpiled somewhere on barges, on ships, on whatever, and that's costly too. So that can cost a company, hundreds of thousands, if not millions of dollars, okay, on a weekly, and that's that can be taxing on their margins, taxing on the company, and it can force a company to go under very easily. And people, you have to understand this too. Okay, when you think it's some say it's just to go and just, hey, stop pulling oil out of the ground. It's not that easy either, because the moment you do that and you kind of reduce the oversupply of oil, at some point in time, there's going to be a shortage of oil. Okay, and that's going to drive prices up. So, and the reason for that is that when you shut down oil production, it takes not a day, not weeks, it takes months to ramp it up again. So that's why they can't just shut down. That'll go and put companies out of business. That'll jack up the oil prices. A lot of bad things can happen from that. So, it's a double-edged sword at this point. We'll see how things work out. If people start traveling and, air travel happens again, then we'll see. Maybe that'll balance everything out. Time will tell. Okay, look, the new normal. The AC world, actually after COVID-19, would love it to be anti-COVID-19 to get rid of this damn thing already. But, the after COVID-19 life, you have a lot of businesses that are going to be impacted, retail, restaurants, so on and so forth. You have big retail outlets, the Macy's, the Neiman Marcus, the Nordstrom, so on and so forth. You have a lot of these companies that are on the brink of bankruptcy right now because of what's happening. And even if they open up their doors again, it's going to be very hard for them to go and bounce back. They're going to look to raise billions of dollars to save their companies. Macy's may raise, $4 or $5 billion just to try to save the company. I don't know. I think that, with the way things are going to be, and you're going to have to reduce the capacity, meaning the number of people you have in your store at any given time, it's going to potentially, cause issues. I mean, there's a potential solution, for that too, maybe. And it has to do with these companies, these retail outlets. They should have did something a long time ago. And I know they had the opportunity to, they just never embraced it. They like the brick and mortar style of retail, which is ancient. It's ancient. You have shopping centers, shopping malls, half empty. I've seen it. Stores closed down. No one's leasing there, because you need the foot traffic in order for it to make sense. And why would you go and reduce your margins and fork over X amount of dollars per month on a lease, to just have a few people run into a store, and it's not cost effective. You have companies that are learning how to work in in this AC world. And, I mean, e-commerce is the way to go. It has been for some time. This is why Amazon is so strong in this space, because it was embraced a long time ago. Started with books, and now look at them now. They're dealing with retailers all over the world. And they're going to have to, I think Macy's and other retailers, I know they have a retail presence, but I mean an online presence, but it's not what it should be. You're making that much money, you should have invested heavily into tech, okay, and start reducing your brick and mortar footprint and increase your online presence, and that would have saved these companies. I don't know what their thinking is. I don't know, who's advising them, but they're getting the wrong feedback. New world, new things to do, and some of these companies are too big. They can't pivot quick enough, and that's going to be the collapse of them. And that's the way that is. Restaurants. Let me talk about restaurants really, really quick. Biggest question is, you have Georgia and other states that are allowing restaurants to open up under certain conditions. They have to have 6 feet of separation. So, or I think in Nashville, it was, or Tennessee itself, 25% occupancy for a restaurant or something of that nature. The bottom line is, the restaurants, they have to evolve. The small ones, even the big ones, if they want to survive. Because you start reducing the people that can come into your place. Now all of a sudden you don't have the crowds. Okay, all of a sudden, you can't fill the capacity. All of a sudden, things are getting slower. So you have to change things up. Technology can help with that. Having, again, an online presence, setting something up for takeout and window service and things of that nature, drive-thrus, okay, having people have the ability to order on their phone and just come pick it up, that type of thing, it can work. And it's just the evolution of the restaurant industry. And if they're not doing that, I don't care how small you are, if you're not doing that, you're going to hit a brick wall. Because I don't see how, even opening up now, how a restaurant is going to get back to where they were. There's no getting back to where you were. You can only go back, you can only adjust to where you could be. So that's something that I see happening. They're going to need to do that. All right, so we'll see. We'll see. One other thing, and for the rest of the show, I just want to focus on this area because, public companies, they're, they're good. They have their, they have the growth potential. They have a lot of things going on. And it's, I think that alternative investments, I don't think that a lot of people understand the impact of alternative investments itself. Any alternative investment should be a staple in any investment portfolio. And there are a lot of reasons for that. I'm going to go through it. Look, they brought, alternative investments brought us the likes of Apple, Google, Microsoft, Facebook, Beyond Meat, Zoom, that love what they do, don't love the fact that they're not secure. Uber, Spotify, Twitter, Palantir, they brought us these companies, these great, and it's beyond tech. It's beyond tech. The list is far greater than what I just mentioned, and in a number of industries, by the way. I just, gave, just companies that kind of hit me at the moment. But it's beyond technology. And it shows that even the most successful, most profitable companies that are now leaders in their industries, in their spaces, in their arenas, they had a starting point. They all started somewhere. And they were all private companies at one time. And that's what I'm talking about here. Okay, Bill Gates and Steve Jobs, they didn't just wake up one day to a multi-billion-dollar, almost $1 trillion empire. It all started in garages and basements, small offices, or in someone's dorm room. And they all have something in common, a big something in common. That commonality is that someone believed in their vision and backed up the company. This is almost always a venture capital, private equity investment by a firm or an individual. It's an alternative investment, a direct investment into their companies that allows them to execute on their plan of action, to bring to life their vision for tomorrow. Now, without this class of investment, we would only have a handful of very powerful public companies, back to the day of GE and IBM and so on and so forth. And the vision of tomorrow would never come to light. Innovation would come to a standstill. I greatly believe in that, because when you have these young minds that are ambitious, they're hungry, they're thinking outside the box, they're thinking about tomorrow, they come up with great ideas. When you have the monster companies, okay, that really they've been to the rodeo, they've seen the show, and it's hard for them to pivot. It's easier for a smaller company to pivot and be innovative and be disruptive. And that's a key thing. Okay. And it looks, I mean, the innovation and solutions, if we didn't have these private companies, they would never be found. They wouldn't be able to, there would be no disruption in this outdated, and these outdated techniques, to a more efficient process for everything from construction to the automotive industry and overall technology. Look, there would be limited artificial intelligence today, and combating infections like COVID-19 and other things, or finding the cure for it, would be closed off and dominated by a few players who would control the game and probably gouge the government, because they can. Okay, and that's why alternative investments, in my opinion, again, are and not even so much my opinion, but in reality, they should be a staple. They should be a staple in anyone's, any investor's portfolio, in any portfolio. Private equity firms, for instance, for the most part, they bring much more to the table than a direct investment. Okay, they bring their experience, connections, mentorship to the table. They help these companies to grow differently. It's not just about throwing money at a company. If it was as easy as throwing money at a company, then you'd have more successful companies than not. I have seen companies get money thrown at them and they just piss it out the window, and they don't know what they're doing because they need more. They need someone to give them structure. Without structure, they're running around in circles and they wind up hitting a brick wall, and investors lose money, and that's what you don't want. So that's why private equity firms that have that structure in place, they can bring it to the table. They don't want to lose money for themselves. They don't want to lose money for their investors. So they need to be that anchor for these companies, and it works. You just look at all the companies that I mentioned and more, and they all have that one commonality. Okay, someone came in to help them. Money, direction, mentorship, and so on and so forth. Okay, and look, private equity firms, they have a good idea of how to connect the dots, sniff out deals that have the potential of having legs on them. They're the believers of what tomorrow can bring, and do it while helping their investors to profit from it. Now, venture capital, that's a different animal. They do their part in this investment class, but beyond deploying capital, a vast majority don't do much more than that. You have the elite ones that really care about the companies they invest in and put together a system that can help these companies to actually succeed. You have a lot of them, a lot of venture capital firms that, maybe they got a trust fund, or daddy gave them some bucks, or something happened there and they want to start investing in companies, or maybe they're, doing something and they, whether it be in Hollywood or music, and they get into the venture capital arena. Now, again, the ones that care help these companies to grow. Other ones just throw money at companies. They hope for the best. They hope that one works out, which is not good for these companies, because they need that mentorship. Look, a capital injection without the value add of an investor's experience or input makes it a much riskier investment for both the private company and the investor. Alternative investments can be anything. Just, it's not just one thing. It's a few things. It can be anything from private equity, venture capital, real estate, like a REIT or something, commodities, hedge funds, direct investments to a private company, even, making movies and art, collecting art and antiques and, that type of thing. What makes alternative investments a key component of any investment portfolio is that it acts very, very differently than a publicly traded stock or bond portfolio. They bring forward a true diversification, enhanced returns on investments, growth potential that far exceeds a more mature public company, and they are typically not a slave to public markets. Publicly traded companies, they're a slave to the Dow. Dow goes down, companies go down, and there you go. That's the cycle. They have the potential of being the anchor in a portfolio, as the investment usually has a low correlation to other traditional asset classes. And that separation allows for these investments to accrue in value and garner the greatest returns over time. And that's a proven fact. They also give life to the ideas, and this is the beauty of it. It gives the life to the ideas and visions of the founders of these private companies. They breed private equity managers who successfully seek out these deals, and they structure these deals which allow their firms and their investors to benefit from where normally they would not be able to. So, in closing, the place of alternative investments ranks high on the food chain of investment classes, as they have the unique ability to bring the most advancement, the greatest returns in the shortest amount of time, and for them to be extremely disruptive, not only in an industry, but that disruption carries forward and has the ability to impact our lives forever. And that's where we are. So if you are an institution, of course you're involved in alternative investments. If you're an accredited investor or an investor and you have the ability to get involved in an alternative investment, it's really good to look at it. It'll be an important part of your portfolio, an important part of your life. And that's about it for this episode of Money Never Sleeps. I'll be back with you next time, and just keep an eye on, as I said earlier in the show, those points that I made are very important, because, the impact, that's going to be happening from the AC life, the new norm. It's going to change everything in a big way. So be aware of that when you're looking at companies and you're looking at what to invest in, or if you are in that industry. I implore you to go and be more innovative in your business, add technology, grow, think outside the box, do the things you need to do to survive, and you will survive and you'll thrive. Okay. All right. Anyway, thank you for listening, and I'll be back with you with the next episode of Money Never Sleeps soon.
Initiating shutdown sequence.
You're listening to UCW Radio in your face.
What is your major malfunction?
So let it be written. So let it be done.
Ladies and gentlemen, my mother thanks you, my father thanks you, my sister thanks you, and I thank you.
All opinions expressed by Louis Velazquez on the Money Never Sleeps radio show and its website are solely his opinions and do not reflect the opinions of the UCW radio show or their parent company or affiliates, and may have been previously disseminated by him on television, radio, internet, or another medium. You should not treat any opinion expressed by him as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. His opinions are based upon information he considers to be reliable, but neither the UCW radio show nor its affiliates, parent companies, and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. The UCW radio show, Louis Velazquez, its affiliates, parent companies, and or subsidiaries are not under any obligation to update or correct any information provided on the radio show or on the website. His statements and opinions are subject to change without notice. No part of his compensation from the UCW radio show is related to the specific opinions he expresses. Please read the full disclaimer on MoneyNeverSleepsRadio.com.